Economics is a social science closely related to mathematical methods. When making predictions and interpretations related to economics, support is generally sought from sciences such as statistics and mathematics. Occasionally, assistance is also obtained from social sciences, particularly in the dimension of behavioral economics, involving human behaviors from fields like social psychology. Both the global and commodity markets play a role in understanding what is happening and what developments are taking place. In the upcoming week, I will share our predictions and interpretations with you. Let's get started. On Friday night, a piece of news arrived in the last minutes. After 1 a.m., after the markets had closed, or even a few minutes before closing, let's say, Moody's shifted its outlook on America from stable to negative, indicating a preparation for a potential downgrade. As you already know, the other three major rating agencies, S&P and Fitch, had taken similar actions. Now, Moody's is heading in the same direction. In other words, all three major agencies are observing the United States negatively. The main reason cited here is the financial troubles being considered on America's agenda, with data indicating that the budget deficit will increase. What we are trying to convey here is such a significant problem that the world is no longer accepting American bonds. The trouble arising from these bonds, as interest rates rise systematically, is causing America to become unable to repay its debt. This difficulty will inevitably continue to impact America's credit rating, leading to an unavoidable conclusion. However, even though ratings agencies may be seen as reliable or unreliable to a certain extent, the outcome will inevitably lean towards the downside. Consider the situation from an interest rate perspective. In a high-interest environment, no matter what economic scenario you try to paint, it won't work. Following Biden, his officials at the U.S. Treasury have made statements like, "We don't agree, they can't see the realities," suggesting a divergence in views. I had heard persistently about the U.S. interest rates last week. I had mentioned that the critical level for American 10-year bonds was 4.48, and as long as it stayed above that, the direction would be upward. That's exactly what happened last week. It hovered around 4.47 and closed at 4.64. Look, that 4.48 is still crucial. As long as it stays above this trend, I am still expecting it to go higher, maybe even reaching 5.1 or 6.15 in the short term. In the long term, it is expected to go much higher. But in the short term, below 4.48, there could be a considerable consolidation period, potentially entering a prolonged sideways movement. This could also be a period of stagnation, much like what happens with gold or silver. The main reasons are insufficient demand and the primary cause of the decline in oil prices being a decrease in global demand. Yes, the era of neoliberal order is over. There has been no such order in this channel for years. I have been trying to explain this since I started. We are transitioning from the neoliberal order to a bipolar, autocratic world, unfortunately dominated by different systems. In the meantime, conflicts and wars in the bipolar world have resulted in increased geopolitical trends, which will also increase interest rates. In the medium to long term, interest rates will not fall, they will only rise. Only during times dominated by recessive waves, the possibilities of interest rates suddenly dropping increase. This happens when the market is negative, and it will only happen then. We will explain it once again. On Thursday, there was a disturbance in the market. American markets even seemed to turn negative about it. Then suddenly, on Friday, it corrected, even exceeding the previous levels. Technically, these are not real corrections. America is causing trouble with its borrowing issues. Look, there was a 30-year bond auction immediately after that. The market got disrupted, and while bond yields were going down, suddenly, they shot up again. Because in the short term, America has some chance of creating demand, but in the medium to long term, it struggles with borrowing, especially for 30-year and 20-year bonds. In that regard, the negative sentiment in them continues to be upward. As you know, most borrowing in America is done through 30-year bond interest rates. As they go up, America's long-term problems in banking, short-term borrowing and eating it up in the long term for profit from the arbitrage, have become difficult. But for a while, the banking system has not been making money. In fact, there was news last Friday that there would be increased assistance from the Dallas Fed president to the banking system. Even as the market was doing well and was very healthy, we saw that the fund allocated for crises in the banking system suddenly grew. On Thursday night, in the data, we actually saw that despite the optimism in the market, it didn't reflect in prices. Yes, it really happened, it didn't reflect in prices.